Welcome, dear viewers. Today we're untangling the web of real estate financing. We'll show you how to see through the best financing options simply, accurately, and with a pinch of fun. Part 1: Introduction to Real Estate Financing. Real estate financing, it sounds dry at first, but it's the key to your dream home. It's all about finding the right loan to buy or build your property. We look at different methods, from traditional bank loans to innovative crowdfunding options. Each has its own rules, risks, and benefits. So, buckle up, we start our journey through the world of real estate finance. Part 2: Classic Bank Financing. Let's start with the classic, bank financing. Here you get a mortgage loan that you pay back over years. Sounds simple, but it has many facets. The interest rates can be fixed or variable, and the amount of your loan depends on your credit rating and the value of the property. You'll usually need a deposit, think 20% of the purchase price. The advantage? Often favorable interest rates. Disadvantage? Lots of paperwork and strict credit requirements. Part 3: Home Loan and Savings Contracts. Now, for a very German specialty, the Building Society Savings Contract. Here you first save into a contract and later receive a loan at a predetermined interest rate. It's like a savings book that turns into a loan. The advantage? You know exactly what interest you can expect. Disadvantage? It takes longer until you have saved enough to use the loan. Part 4: State Subsidies. Now let's take a look at government subsidies. In Germany, for example, these are the KfW loans. They often offer lower interest rates and sometimes even subsidies, especially for energy-efficient construction. Sounds great, but the catch? You have to meet certain criteria, and there's a lot of bureaucracy. Part 5: Private Lenders and Crowdfunding. Time for the modern age, funding from private funders or crowdfunding. Imagine getting your loan not from a bank, but from a group of people or investors. This is often faster and more flexible than traditional banks. The disadvantage? Higher interest rates and less security. It's like surfing a big wave, exciting, but not without risk. Part 6: Equity and Personal Contribution. Not to be forgotten, equity and personal contribution. If you already have money or are handy, you can save a lot. Your equity reduces the loan amount, and your own work can reduce construction costs. Just like cooking, if you already have the ingredients and cook yourself, it's cheaper. Part 7: Tips for choosing the right financing. Finally, how do you choose the right financing? Think about how much risk you can take, how flexible you want your repayment plans to be, and how much equity you can contribute. Remember, financing is not one size fits all, it should fit your individual needs and capabilities. That was our journey through the world of real estate financing. We hope you now feel better equipped to make the right decision. Don't forget to subscribe and like if you enjoyed our video. See you next time. Discover more useful real estate and finance tips in our other videos. Follow us on social media for the latest updates.